Good morning, ladies and gentlemen. A very warm welcome to you from a blisteringly cold Delhi. I am Shail Bhatnagar and you're on Market Today. It's the last day of the week and, of course, a fresh week that is there in 2025. A very warm welcome to you. Let's begin with the basics. Yesterday, which was Thursday, as also the weekly expiry of the Nifty, was a great day for Indian equity markets. You've seen a very sharp rally coming into many stocks and many indices. Actually, it was led by short covering, and we've seen a very sharp move coming on the Nifty, about 350 points as far as the markets are concerned. A strong move coming into Nifty Bank. The IT index was in top shape, and many other sectoral indices, chiefly the auto index as also the FMCG and energy indices, showed strong traction on the long side. The advanced decline ratio was fantastic, and let me just give you the good news up front. We've seen a temporary pause in foreign institutional selling. They actually purchased stocks worth 1,507 crores in the cash market. The DII purchases amounted to about 22 crore rupees, but this is a huge sigh of relief for a market that for the last three and a half months has gone down on sustained foreign institutional selling. So at multi-month lows, as also the fact that valuations in many stocks and sectors have corrected substantially, we have a sharp rally. That was yesterday, and we have a positive FII number. There are no other major cues that are coming in from overseas markets that could be construed as negative, which essentially means that this pre-budget rally that we will have seen getting deeper and bigger will now have more legs. More importantly, we are very close to the third quarter earnings. Beginning Monday next, you will see a round of earnings coming into the markets, and that hopefully will add more to the bullish fervor. So from a high of 26,270 to a low of about 23,280 on the Nifty, we've had a nice correction over the last three and a half months or so, and over the last 2 or 3 sessions we've seen a nice base being built for the Nifty. At least you'll see a lot of graphics that are there upon to you, and this base building was apparent in yesterday's traffic. You saw a lot of hectic activity in one of the most beaten down counters, that was the auto space. Look at how Eicher Motors moved about 8% higher immediately to a record high, as also a lot of activity happening on Maruti, which is the largest passenger vehicle maker. There is huge amount of buying happening in Bajaj Auto, in Hero Motors. All these stocks have seen huge corrections from their intra 2024 highs and are now presenting an opportunity perhaps for bigger players to re-enter the market. Sakshi has joined us. A very good morning to you, Sakshi. And what do you think is the FI number for yesterday? Remember, we talked about it, that it should be positive, and it is.
Absolutely, snapping a 12-day of sell-off. We've actually seen the FPIs buying in the Indian stock markets yesterday. They bought stocks worth about 1,506 odd crore rupees, while the DIS bought stocks worth about 22.14 crore rupees right there. So both the DIS and the FIs were on the positive zone. Well, apart from this, we will be also looking at a whole host of stocks today, viewers, that you should be keeping a keen eye out on. Hindustan Zinc is something that you can keep an eye on. The company has reported a 2% year-on-year decline in the mined metal production to 265 kilotons for the third quarter of fiscal year 2025. Capital Small Finance Bank will also be in focus. This is the third quarterly business update that the company has come out with. Total deposits up by 12.2% year-on-year. Then Bank of Maharashtra will also be in focus. The bank's gross advances have risen by 21% on a yearly basis to 2.29 lakh crore rupees from the in the October to December quarter. Avenue Supermarts, here the company has reported standalone revenue from operations that have risen 17.5% year on year at 15,565 crores in the quarter ending December. So that will be in focus. MOIL is something that you can keep an eye out on. It's achieved the best ever third quarter in terms of performance. It's reported a production of manganese ore of 4.6 lakh tons, while the sales have risen 13% to 3.88 lakh tons. From the two-wheeler space, Hero Motor will be in focus. Remember, the total sales in December fell by 17.5% here to 3.24 lakh units. The domestic sales were down 22%. So disappointing numbers coming in there. Apart from this, we'll keep an eye out on Biocon. The company's arm, Biocon Pharma, has received an approval from the NMPA in China for a drug. This is tacrolimus, which is an immunosuppressant, and it is used in the treatment of organ transplant in patients, which reduces the body's ability to reject the organ. V2 Retail has reported a 58% jump in standalone revenue from operations to 591 crores in the third quarter. It's achieved the same-store sales growth of 25%. V-Mart Retail, the company's reported a revenue from operations at 1,027 crores, up 16% in the third quarter, and it's achieved a same-store sales growth of 10% in this quarter as well. Wockhardt is going to be in focus. The drug regulator has approved Wockhardt's new generation oral antibiotic Micnaf for the treatment of community-acquired bacterial pneumonia. So that also will be in focus right there. Apart from this, you can keep an eye out on two other stocks which are going to be trading ex-trade for bonus. KPI Green Energy, the stock will trade ex-trade for 1:2 bonus issue. Garwade Technical Fibers, the company will trade ex-trade for 4:1 bonus issue right there. So those are the stocks that we can keep an eye out on, Shell.
8:46, ladies and gentlemen. We are waiting for Mr. Mayuresh Joshi to join us. He's the Director for Equity Research at William O'Neill India. He's a regular with the market, and of course we'll be talking about how sentiment has improved for the better as far as the Lal Street is concerned. A lot of hectic activity also happened in the NBFC space yesterday. Now there are two underlying themes that are running the NBFC market. One, in the budget ahead, which is February 1st, there are hopes that the government will take some steps to ease the liquidity pressure that is there in the economy. One of the reasons for the slowing down as far as markets are concerned over the last 6 months and the economy is this very sharp clasp on unsecured loans, and that's the reason why NBFCs such as Credit Access Grameen, such as Sundaram Finance, such as Bajaj Finance, and many others such in their ilk had corrected sharply over the last 6 months when RBI said that unsecured loans need to be watched, and it's visible in some books of few mid-sized NBFCs where NPAs from this side of the market have sort of gone up dramatically. What is also buzzing is counters like Muthoot Finance, fresh record high, rise in gold prices, as also a very sharp uptick in gold loans is one of the reasons why you see Muthoot Finance at a record high. Hotel stocks are doing pretty well, and of course the entire PSU space linked to the budget, which is an annual feature. Fertilizer stocks, you have a sharp up move coming into a few railway counters, and of course the defense place, they are doing pretty well. Sakshi.
Okay, we'll also keep an eye out on some of the brokerage houses reports right there. Remember, CLSA has come out with brokerage call on Avenue Supermarts, and there is in fact a divided opinion on the street as far as Avenue Supermarts is concerned. So CLSA has an outperform call and a target price of 5,360 rupees per share, as the company has reported the standalone revenues that have come in above estimates, and the company has added new 10 stores during the quarter versus 6 on a quarter-on-quarter basis, taking the total count to 387 at the end of Q3. Now, Morgan Stanley has an underweight call on Avenue Supermarts and a target price of 3,702 per share. And although they believe that yes, the standalone revenue was above estimates, top line growth was led by an average 12% increase in the stock count and same-store sales growth, which has improved sequentially. They say that the company, however, remains well below the historical 20% top line growth algorithm for business. So that's something that has led them to give a lower target, and that is 4,700 too. Now, on consumer durables and on the EMS space, Nomura came out with a report. They believe the structural drivers could sustain a healthy momentum here. Macro tailwinds in the EMS will continue to drive strong growth in the slower growth in the most durable segments. Structural drivers will be supporting growth in ACs, cables. EMS scale up is on track as well, and they prefer Dixon and Voltas. They have a buy call on both, haven't shared the targets yet. On PNB, Morgan Stanley came out with an underweight call and a 95 rupee target. They believe the initial update is a positive surprise on volume growth, which was much stronger than expected in the domestic CD ratio at 72% and stayed lower than the system as well. But they have a 95 rupee target on PNB right there. So those are some of the brokerage houses reports that you can look at right there. And just the right time to welcome Mayuresh Joshi, Head of Equity Research at William O'Neill India. Warm welcome to you, Mayuresh, and Happy New Year to you. I hope you have a fantastic one right there, and in this new year, maybe see you more often, guiding all our viewers through the stock market trends and various insights that you continue to share. Tell us, how did you celebrate the New Year's, and what's the resolution that you've taken?
Morning, Sakshi. Morning, Shel sir. So, Happy New Year to you guys. Happy New Year to the entire team at BTTV, all the viewers as well, and hoping that this year is a very healthy, wealthy, and a prosperous one for all of you. I was partying, so I think the party continued till the wee hours of morning. But yeah, I think
Wow.
the resolutions are very simple: work out, more fitness regime, and have a healthier lifestyle.
Fantastic, Mayuresh. And tell us, what do you expect? We've had the first 2 days, fantastic one, and you can see Shell in his golden avatar. You had given him the name last time when you had come in. You called him the Bappi Da of stock markets, and there he is in that same avatar. And we are actually giving all the credit to this look that has finally fueled some spark back into the D Street. And finally, we have a new year with strong moves.
So, Sakshi, I think I just received a meme yesterday. I think it was a two-liner, which I would like to share. I think Shel sir will love it. मोदी जी ने कल दिलजीत से मिला, मोदी जी कल दिलजीत से मिला, और निफ्टी के बुल्स ने दिल जीत लिया. So I think yesterday's move was largely factoring in a large part of how the sentiments on the street are. But yes, I think we look forward to how earnings will play out. Earnings are expected to be soft. But I think the markets will take that in its stride. Flows remain very, very strong. What Trump will do in his rhetoric once he resumes office in terms of tariff impositions or otherwise will obviously have a large say in terms of how markets will react. But I think in a nutshell, outside US, if you probably look at three important facets, one, economic stability, which our economy is, which the Indian economy is probably delivering on all counts. Political stability, look at what is happening across the globe. I think India is one of the best placed economies when it comes to political stability as well. And third, in terms of all the inflationary data points that we're probably seeing, yes, there is some stickiness as far as core inflation is concerned, but that should get under control as food inflation largely comes under control in the next few weeks. There will always be certain elements in terms of how earnings will play out, but they should revive, in my opinion, as we head into Q4 and the first half of the next financial year. And last but not the least, I think the expectations in terms of what the budget can throw up. If there are positive surprises in terms of any tax incentives that probably come through specifically for the middle class, I think the markets will take it with both hands. So I think outside the US, India, the best place market, FIs might be ignoring it at this point of time, but they'll have to return at some point in the next few weeks and months.
Right. Very good morning to you, Mayuresh, and a very warm welcome. I distinctly remember my new avatar, the golden glow that you see on me, started last Friday. You were our first guest on that day, and it's been a wonderful journey from then on. I personally believe, I may be completely mistaken, that the markets turned because of me. This is one of those, very, very rare thoughts that I have about my efficacy. Otherwise, I don't believe in any such thing. But, you need to do something out of the box for the market to, take a turn for the better. And that seems to have happened yesterday.
Yes.
Look at the advanced decline. Look at the way the auto index has moved, 3.5% higher. Exactly on December 17th last month, we were berating ourselves that Vahan online registrations are not there. And they have fallen very sharply, and they were rightly so. And look at how Motors moved yesterday, 8% straight, a record high. Look at how Maruti moved. Look at how Tata Motors is attracting buyers after a 30-35% correction. So, given this, instance where smart investors and deep pocketed investors such as you want to buy pain, what would be the top pick in the auto sector?
The Shelter, I think first compliment on your look. I think it really looks good, and I think you'll probably start a trend in terms of men's gold jewelry fashion. I pretty much hope that probably happens. Coming to the auto sector as a whole, I think what you probably witnessed were surprising numbers, because I think genuinely the street was not expecting, as an example, Maruti post a very decent set of numbers across its product suite. Eicher, again, surprising in terms of how it's growing out. But again, I think the surprising trend, as we discussed a couple of weeks back on your show as well, vehicles, specifically on the four-wheeler part, which are priced 15 or 18 lakhs above, I think the demand probably stays very, very stable and strong. Similarly, I think for higher range bikes, like what Eicher does, for the premium bikes that TVS is doing or Bajaj is doing, I think the appetite is still there. Obviously, you've seen elements of price increases come through because of input cost pressures starting Jan. But there are also a slew of launches expected to come through, specifically when it comes to SUVs and hybrid SUVs. Maruti is coming out with its Grand Vitara version. M&M is expected with a few launches as well. Tata Motors, a few launches as well. So competition is going to remain fierce in this space. Competition intensity will also mean that pricing also probably remains in check and not exaggerated as far as the four-wheeler space is concerned, or to a large extent, even extended argument to the two-wheeler space. So surprising set of numbers in December, the stocks reacted, but how the actual numbers play out in the quarter to come, in Q3 and Q4, is going to be an interesting deciding trend. Obviously, I think the first half of the next financial year, once the base effect is largely done with for this financial year, which largely would be flat year on year on a marginal increase, you should see some element of all these exercises as these companies are doing new launches, etc., actually starting to play on volumes and numbers as well. And therefore, I think within the pack, I think M&M as a stock still remains one of our preferred picks, and one of our picks in our global portfolios as well. A good mix in terms of the SUV portfolio, more launches coming, tractor portfolio doing well, and the substitutes doing well. Maruti has been a surprise in December, but again, I think it's a steady performer. And again, I think for India and Indian auto industry, sales after service becomes extremely, extremely critical, which Maruti probably has, and it's touching the right touch points through Nexa, premium, through its after sales network, the other products that it's brought in the mini SUV or the compact segment as well. So I think these two stocks might be standout performers as far as four-wheelers is concerned. Within two-wheelers, TVS Motors might actually continue its good run.
Okay, so that's as far as the auto space is concerned and the key ideas there. Mayuresh, we're also now looking ahead to the upcoming budget. Are you looking at any pre-budget ideas, sectors, stocks that could be benefiting the most? Should one look at them?
No, I see. If you probably look at the typical construct of a budget, Sakshi, the capital spending is something that the street would like to watch out to as a figure. Now, when the capital spending figure does come through, it's largely going to be allocated to infra, manufacturing, and within that, you're probably looking at roads, railways, defense, as a large part of the infra theme. And therefore, the capital allocation towards these sectors will be substantial. When you're probably talking about manufacturing as a theme, all the PLIs that have probably got announced for a lot of sectors, including pipe companies as an example, including Jal Se Nal as a Yojana. I think a large part of that pool is probably going to go through in terms of ensuring that the manufacturing prowess of India Inc. And the backward integration probably gets far more solidified to probably ensure that the China thing actually plays out. So again, I think typically, all this will translate into some ideations related to cement, which will obviously have a good proxy for rural, urban, affordable housing, roads, port development, etc. You've got your typical plays which react before the budget through railway stocks, defense stocks, which always come in flavor as the budget approaches. But they've got a strong tailwind behind them as well, with strong order books, better margin orders coming through. They are executing well. So your typical railway stocks, defense stocks move. Power as a theme might continue gaining significant capital allocation. And therefore, as I've time and again said, I think the entire ecosystem related to power selectively, where earnings might remain very, very steady, whether it's generators, transmitters, EPC players, or financiers, might continue doing well. Banks, BFS has a space. India needs growth capital. So I think BFS as a space should continue doing well. Valuations are good. They're making good base structures. EPSRS ratings, as we see in markets with India, look very, very attractive. And last but not the least, some themes related to the ESG component, which I've always believed in, whether it's water treatment, desalination, I think those themes might continue.
Right. Let's focus on this wonderful green tick that we've seen on the Nifty. 168 points higher, 24,350, ladies and gentlemen, is with the bulls. And it gives me great pleasure to tell you, out of 10, 9 index heavyweights have opened in the green, led by TCS, 203 rupees higher, 4378. You have Hindustan Unilever, 15 rupees higher, 2385. Let's focus on the auto space. This was a blowout yesterday. Tata Motors now 9 rupees higher at 774. You have Reliance quoting 7 rupees 20 higher, 1249. HDFC Bank is in the green, 5 rupees higher, 1798. Axis ICICI Bank, a very strong show by ICICI Bank, 60 rupees higher, 1351. This is really, really interesting. The Nifty is now, ladies and gentlemen, 200 points higher thanks to this gold band. Keep this in view. Okay. IRCON, let's focus to cash. 2.5% higher, 233. There is an event update by DMart. A lot of hectic activity here. 8.7% higher, 3925. A very quick look at what is happening in the most active space. Anything that catches my fancy? Yes. Raymond, 2.4% higher, 1820. There's no stopping Sundaram Finance, ladies and gentlemen. I can't remember the last time I saw Sundaram Finance in the top traded list. We'll be quizzing Mayuresh on the NBFC space. A sharp rally within the FNO space. Let's look at some talks that are clicking in the green. M&M 1% higher. Mayuresh just pointed this out to you. Trend, Sakshi's been tracking this one, 0.7% higher, 73.75. Gold Jewelers, Kalyan Jewelers, another uptick, 0.3% higher, 790. Okay, ladies and gentlemen, this is looking good. The Nifty is now 76 points higher in the green. Let's see how Friday pans out. Mayuresh, yesterday's day belonged to auto, but coming close second was NBFCs. Very sharp volume action in the likes of Bajaj Finance, a very strong uptick in Sundaram Finance. What, according to you, is the market now thinking about NBFCs? Do they see this liquidity squeeze easing, and maybe the new governor at RBI thinking positively in terms of loosening that very tight grip on unsecured loans?
Difficult to say on that, Shelter, but what we are probably now seeing is that a large part of the NBFC universe, which is divided into urban NBFCs, which are largely focused on urban areas, and rural-focused NBFCs, a large part of their mix in terms of advances growth, in terms of deposit growths, are probably looking stable. Now, the better rated NBFCs with good corporate parentage coming through have better capital adequacy, and therefore I think the balance sheet growth that can come through can be far more consistent and robust over the next few quarters. The other advantage that they probably got is the borrowing mix, which is extremely critical for NBFCs because of their corporate parentage and better credit ratings that they probably possess. The cost of borrowing is a tad bit lower compared to the lower ranked NBFCs, and therefore I think the kind of NIMs and spreads that they make are reasonably good enough and consistent enough. Last but not the least, at some point of time, most probably in February, you'll see the first rate cut. And though the next rate cut might get delayed because of global factors, there is a huge expectation that as the rate cut cycle dwindles lower, the expectation of NIM and spreads actually improving for better rated NBFCs might actually be a boon over the next few quarters, and specifically starting from quarter one of the next financial year. And last but not the least, I think the spaces that they're operating out of, collection efficiencies have largely improved. Obviously, within this space, microfinance companies are still going through their periodicities of pain. So our take is that within the space itself, Shriram Finance, as an example, is something that is holding out. Super product mix that they probably got, very little exposure to unsecured loans, personal loans as a percentage of their overall top line. And therefore, I think the kind of asset quality that they're posting, the kind of NIMs that they're probably having, very, very attractive. Might be expensive, but again, I think premium valuation because of the kind of numbers they're posting. Housing finance is a very interesting space, and therefore PNB Housing, strong set of numbers that the company has posted, and they getting into the affordable and emerging segments, which is a high yielding segment, where the management sounds very confident from the experiences that they've got in terms of credit underwriting for the core retail segment that they operated out of, that they will be able to perform well with asset deterioration not expected that much, even in this segment, which is the most susceptible in terms of advances that are probably given out to the segment itself. So I think these two ideas probably might continue doing well, in my opinion, as far as the NBFC space is concerned.
Okay, NBFC as well as the housing finance space right there. Mayuresh, what about the IT space? The street is still divided on whether it is too late to enter now. Has the best of the rally already played out, or is there going to be much more? Of course, there is weakening rupee. There will be incoming Donald Trump taking office. So all the focus will be how H-1B visas and other aspects will play out. Earnings will start just pretty much soon in the next week. What is your sense on the entire IT pack, large cap versus mid cap again? What is the right approach in the new year for the IT sector?
So again, I think like last quarter where we had gone with certain assumptions, mid cap did outperform large cap. I think the same assumption continue. I think the logic remains very, very simple, Sakshi. I think if you look at the entire management construct and commentaries for a large part of the mid cap IT universe, they are sounding very, very positive. At the end of Q2, albeit you have to probably give it with a pinch of salt because Q3 will have a lot of furloughs. It's a seasonally weak quarter. But they sound very, very optimistic in terms of order wins coming through, the pricing at which these orders are coming, they're executing well, margins remain strong and consistent as well. And there are a lot of opportunities that they expect coming their way, whether it's cloud computing, whether it's ER&D, or whether it's generative AI, because I think specifically I think the tech that goes behind generative AI is very, very niche, and it's complicated to a certain extent that you probably need that kind of IP resources to probably ensure that the client needs are understood and serviced at the right time. So I think our companies do have the capabilities in all these aspects selectively that they operate out of. And therefore, I think valuations, even if they are tad higher compared to their 5-year standard deviations, earnings will continue to grow for mid-cap IT companies. And that is where our thesis lies. So again, I think emphasis, for the sake of repetition, I think emphasis persistent cohorts is something that we continue holding in our global portfolios with a very, very clear disclaimer that we bought these stocks at way lower levels.
Right, 908, the Nifty settled at flat, 7 points higher, 24,196. Let's look at the Bank Nifty and IT. Both of them are down a bit, but this is looking good, and let's hope that the momentum that we saw on Monday continues. A 6% uptick on DMart. This has been a stock that has corrected very sharply, and the business update that has come in is heartening. Valuations, Mayuresh, from DMart, how do they stand as far as your valuation sheet is concerned, and where do you see the company, say, 2 years from now? It's facing a problem with this online 10-minute delivery that has, sort of captivated us all, at least in urban cities.
So business updates, Shelter, have probably propped up the price right now. But again, I think they are going through their periodicity of pain. So if you probably look at the last few quarters, numbers have been struggling for demand. And obviously the model that they probably built in, groceries and apparels. I think the entry point becomes groceries, and then the customers probably gravitate towards the apparel part within their stores itself. Again, the biggest advantage they've got is own stores, where the revenue per square feet, the EBITDA per square feet is far better than its competitors. But they are struggling. You are absolutely right. With online competitors, aggregators coming through, dark stores coming through, and mushrooming and expected to grow even further in the next few quarters. The Instamart operations or the quick commerce operations is something that is obviously hampering. But I'm pretty sure at some point of time, I think even DMart will devise a strategy that you probably expected to see in terms of tackling this competition as well, from their stores to local areas that they probably service in. I'm looking forward whether they probably come out with something on this front. And if they change their business model, tweaking to what the existing conditions and market conditions are like, I'm pretty sure that that can have a say in terms of how the numbers will play out. I think the promoters are far more intelligent than what I'm saying right now. And therefore, I think if these strategies come into force and they effectively reflect on numbers, I think a re-rating might come through. Valuations are still steep. So it's not that the stock is cheap. It's always traded at premium valuations because of the numbers that they posted. Because of the lack of numbers and execution that was coming through, it has corrected. But I will still like to see for a quarter at least on how these numbers are playing out and how competition is playing out before any premium valuation and a re-rating is justified, at least from it.
Okay, got that. Since you were talking about the quick commerce space, I'm also coming to the new age tech space beyond Zomato and Swiggy as well, getting into focus PB Fintech, Paytm, MobiKwik for that instance as well. How is the year going to pan out for these particular stocks? We've already seen a sharp run up of PB Fintech yesterday, about 8.5%. Today, again, it's indicative of a 0.5% higher opening. Paytm has tripled investors' money from the lows as well that we had seen. So things coming back to shape, and now MobiKwik is there into the competition as well. In the new age tech space, are there any strategies that you're adopting to select a few stocks among all of these? How is it that you're approaching this space?
I think they're largely gestating it, but something that we like, Sakshi, right now is Apple India, right? So it's also a platform aggregator which does a lot of mobile advertising, digital advertising on mobile phones and all your connected devices as well. What they've probably done correct is the entire ecosystem, right from the demand stack to the supply stack. They've probably done that in a far more seamless fashion. And therefore, the kind of numbers that are now showing up, top line over the last 4 years has consistently grown in excess of 45%. EBITDA and PAT have grown consistently at 40-odd%. If you look at the first half numbers, they are on their way to delivering what they've delivered in the past. So in terms of their converted users, they're almost at 18 odd crores, both India and the global mix as well. And if this run rate continues, the converted users, which stood at 31.3 odd crores in FY24, should probably exceed 36 odd crores, which gets reflected in terms of their CPCU, which is the cost per converted user, at 57 rupees 20 paisa. It is far better than 55.6, which is 55 rupees 60 paisa that you saw in FY24 or the first half of FY24 as well. So users are increasing, the revenue mix is increasing, the CPCU charges are increasing, which makes us believe that earnings consistency will probably remain on balance sheet. So where the market is concerned, whether earnings will come through, Apple, what it has delivered in the past, might continue delivering in the next few quarters.
Right. Let's take a detour into the PSU space. Fairly decent upticks in pre-open. Manganese ore, company's business update has fired up the stock. 4.7% higher, 354.20. Maharashtra Bank, 3.7% higher, 54.7. Rights, 2.4% higher, 300. And you have minor and modest gains in Union Bank, JK Bank, Bank of Baroda, UCO Bank. So the PSU basket is firming up on the banking side. Railway is doing pretty well. Look at IRCON, IRFC and RIGHTS. Fertilizer stocks in demand. Look at NFL. Look at Power Finance Corporation, ONGC and Oil India. So these are the stocks that are having a fairly decent uptick. A very quick view on the PSU banking space, Mayuresh. Anything that catches your fancy after this sharp downtick that we've seen over the last 6 months?
So I think Shells at Bank of Baroda, decent numbers in Q2. I think expecting decent numbers to continue going forward as well. Albeit there might be some element of softness coming through as far as CASA is concerned, but that's for the entire industry as well. And Bank of Maharashtra, I think, again, strong updates that the bank has probably given as far as its Q3 outlook is concerned. I'm sorry for that. But largely, again, I think these couple of names within the PSU basket look good outside State Bank.
Okay, ladies and gentlemen, the markets are upon us. Let's look at what they are telling us. A mild downtick on the Nifty, 40 points lower. Bank Nifty is down 51. IT index is down 76. But the NSE 500, the broadest measure being one of the best sentiment indicators, is up 14 points. Now let's drill down into the heavyweight space first and find out what it is telling us. Okay. SBI is 0.3% higher. Hindustan Unilever is 0.5% higher. For the moment, HDFC Bank is up 1 rupee, 17.95. What is Reliance doing? Flat, down 3 rupees 65. How about Infosys, down 12 rupees 20. TCS down 22 rupees. So far, it's been a negative start on the index, but all the losses are very, very minor. There is a defensive push coming in from Hindustan Unilever. D-Mart, ladies and gentlemen, up 10%, 39.72. Is this the start of a new trend? Most probably, and of course, it is the second most active traded counter in the FNO space. That itself says that fresh activity has now begun. NSE 500, D-Mart top gainer and most active. That's really, really interesting. Let's look at Maharashtra Bank, 4.5% higher. Let's look at Thermax. This is the infra space that was beaten down, that is coming back, 2.8% higher. Central Bank of India, this is low ticket, high beta, doing fairly well, 54 rupees 80. UCO Bank, Yes Bank, these are going to be possibly the PSU days. Let's look at the PSU rally. Now, we track 88 PSUs for you. On the top form, MOIL, manganese ore, 5% higher, 355. In the green are railway stocks. Let me just mark them for you. RITES up 3.4, IRFC up 2.2, RVNL up 1.7, JWL, Jupiter Wagons up 1.1. We track 22 railway stocks for you, 20 are in the green. Mayuresh, do you think it's a bit of an overreaction on D-Mart, up 10%?
Seems to be the case, but I think it is reacting to numbers and then the updates that they've given. But again, I think, as I mentioned in my commentary, I think consistency will be the key going forward.
That. Apart from this, there's a lot of buzz also on several other stocks. PSU banks are doing very well in this morning trade, about 1% higher for this space. And we have Bank of Maharashtra up 4%, Central Bank of India, Punjab and Sindh Bank, UCO Bank, Indian Overseas, all of them up and about right there. Within the broader markets also, there is a lot of move. Nifty next 50 names are doing well. Apart from Avenue Supermarts, that's up 10%. You also have IRFC, PFC, REC, NHPC, Divi's Laboratories, Adani Green, Tata Power. These are the stocks that are buzzing in the Nifty next 50 list. Amid the small caps, that's up by about 0.6% again. There are interesting names like Z is up and about 4% higher. BLS International is up 3%, RITES, that's also buzzing in trade. AFL that Mayuresh had marked is up by 1.5%. You have Blue Star, Amber Enterprises, a lot of these consumer durable names that are also buzzing in trade right there. Let's discuss with Mayuresh a few pockets then. First up, PSU banks for you, Mayuresh. How would you approach them? Remember, in 2024, we've had a long part of the year where we consistently discussed about the second-rung PSU banks clearly outperforming, and then came this consolidation. In the new year, is the approach going to be different? Are you going to be probably sticking with the large ones in the PSU bank, or will the second-rung ones again have a good stead?
So I think outside SBI, I think a few of the second-run PSU banks might do well. So as I just mentioned, I think Bank of Baroda, Bank of Maharashtra might actually stand out. The reason is very simple, Sakshi. I think the deposit degrowth that we witnessed in the first half, there are initial signs that deposit growth largely is coming back and largely outpacing credit growth. At least 1 month's data is showing that the previous month. If that consistency continues, my own sense is that because PSU banks have a large part of their lineage accounts and a very sticky deposit base, that should grow at a decent pace, giving them the ammunition that they probably need in terms of better advances growth compared to the overall industry. The second aspect in terms of provisioning that they have on their balance sheet is largely covering a large part of their stress pool. And therefore, any recoveries that probably come through and write-offs that probably come through get added to their bottom line, and therefore return ratios improve. A lot of PSU managements are pursuing recoveries very, very steadfastly. And therefore, I think a combination of these factors, along with the digital mechanisms that these banks have adopted, obviously relates to a lot of cost efficiencies building into their models as well. And therefore, I think as a space, valuation, base effect, our canceling parameters probably hold.
Okay, 921. It's looking good, at least for the PSU pack. We track 88 PSUs for you. About 75 are in the green. DMart is top traded. Sakshi, it's really interesting. 7.8 lakh shares on DMart have been traded in the first in the first 1 minute of trade. Now 8 lakh shares have been traded, and yesterday's volume was 5.66 lakhs. The stock is up 10%. It's most likely that you will see a better move on DMart. Remember, now it is a part of the FNO. Therefore, the first circuit is 10% either way, up or down. So for the moment, it's up on DMart. Now look at volumes. Sundaram Finance. Mayuresh, I'm coming to you on Sundaram. 4832. Yesterday, the counter hit an intraday 20% and closed 14% higher. Today, the uptick is 2.8%. Remember, Sundaram Finance is deeply linked to the commercial vehicle cycle. A quick one, Mayuresh, on Sundaram Finance. I have never failed to mention that in the last 30 years, one of the strongest balance sheets that I've read consistently has been from Sundaram Finance.
Oh, absolutely. Again, and I think all the ticks that we look in the check boxes, right? Corporate parentage, corporate governance, consistency in terms of earnings delivery, strong capital adequacy. I think all of them are probably present in Sundaram Finance. And therefore, I think when you're probably looking at the construct in terms of a semi-urban and a rural mix, I think they probably got the right mix as we speak. Strong trends as far as parameters are concerned. Valuations might be a tad bit expensive, but anybody holding on to Sundaram Finance should continue.
Okay, oil and gas, that's also pulling up pretty smartly, 0.8% higher. Mayuresh, what is your suggestion here? We've been seeing upstream makers really strong up and about Oil India, ONGC for the last few trading sessions. The way the geopolitical tensions are continuously rising, and there is uncertainty across the globe even now. Oil prices again, although inching higher, but there has been a lot of volatility in the past as well. How would you approach the upstream companies within the oil basket?
So again, Sakshi, expectation is that there will be more production numbers coming through, specifically for players like ONGC and Oil India, which is the biggest two players as far as three companies are concerned. But I think it's all related to oil pricing, right? The expectation here again is that US is building up on its strategic petroleum reserves. They are close to 425 million tons. Ideally, we need to get to that figure of 625, 650 million tons. Again, you're probably hearing stories in terms of China demand is coming back. Obviously, I think Europe demand is coming back. You've seen some element of volume cuts done by the OPEC countries, which is stabilizing oil prices. And therefore, how oil prices react and the realizations thereof are going to be extremely critical. Obviously, for ONGC Videsh also is going to be a big contributor going forward, both in terms of the exploratory blocks as well as expectations of oil prices, if that stays in that range of 75 to 80, being consistent in terms of earnings delivery going forward. But I think the ifs and buts that happen on how crude will move, on how production numbers will move, the kind of spending that they need to do in terms of exploratory wells, the write-offs that are required thereof as well, make the numbers very, very volatile. So I've always considered these stocks that you play momentum when it comes. Obviously, the dividend yield is pretty compelling for both these stocks. But again, an investment thesis over a longer period of time, I think we don't think that it makes absolute sense. You can actually have some momentum in these counters as the cyclicality plays out.
Let's shift focus to another part of the market, and that's the broader space. Now, you might be thinking that the Nifty and the Bank Nifty is in the red, therefore, there is little or no action on the long side. Ladies and gentlemen, nothing could be different from truth. A very, very strong advance decline ratio, 3:1. Remember this. 1641 shares in the green, 541 in the red. So for every one stock that is falling, 3 are up. That's a very, very positive ratio. After especially yesterday's rally. Now look at the mid cap index. It's a third higher, 58 283. Look at the small cap index, 0.5% higher, 19122. Remember, 188. Yesterday the smalls and the mid caps did not participate. So today they are making up, and there is a bit of a pause on the Nifty and the Bank Nifty. Okay, now what is the NSE 500 telling us? It's saying 367 stocks are in the green and 132 are in the red. I am waiting for the first 5 minutes to 15 minutes to lapse, and then I look at DMART. The kind of volume that you are seeing coming into DMART even at circuit is amazing. Now 8,34,000, 8,37,000 shares are being traded. The next circuit, if at all, will be 15%. So another 5% uptick. Whether it happens or not, we will check out. What else is in action? Vishal Megamart, which is a competitor of DMart, but on the other side, the business of clothes. 5% higher, very, very strong volumes, 113. This is a recently listed counter. In top shape, ONGC, 3.5% higher. Let's look at new highs, something that we check very regularly. Okay, EPAC, another 5%, 621.80. V2 retail space is now picking up very sharply. Okay, 5% higher at 1728. Transformer company, Sakshi, Indotech 5%, transformers and rectifiers 2% higher. One of the favorite ETFs that we've tried, Mafang ETF, 3.6% higher, 138. So this is how it is, ladies and gentlemen. It's a fairly consistent opening in the market. Mayuresh, anything you've noticed?
I think strong start, Shell sir, and our take is that we are being a little bit more selective on the broader markets at this stage.
Mayuresh, I also wanted to get a sense on the pharma stocks from you. How are you approaching them? The pharma index has been the top performing one in 2024, 40% uptake. And now all of these stocks are actually coming back with full flavor. Walk hard, look at Biocon, for instance, the way it sprung back. Cipla, Sun Pharma, they're all doing very well. Even the laboratories and the hospital stocks, but the frontline pharma space with the newer drugs are getting approved right there, pouring into the new categories. What exactly should be one's approach? And do you think this space has enough to go even for another year ahead?
It's a high possibility. And again, I think being an underweight sector 6 quarters back, it's an overweight sector. So a large part of the institution holding, HNI holding, has come largely over the last few quarters. But having said that, I think expectations in terms of more product launches coming through, specifically the specialty launches,
Yeah.
are going to be very, very critical. So if you're probably mapping this sector well, I think companies like a Sun or a Dr. Reddy's have a very strong specialty pipeline, which is ready to get launched. And those exclusivity launches, as they come through, come with a definitive time period, which means that the revenue exclusivity, the margin exclusivity probably stays with them. And because of their pipeline, consistency of launches is something that one can really expect, which reflects positively in terms of numbers. R&D spend should be far more consistent, and therefore I think the EBITDA margins should remain stable or improve thereof as well. Considering all these factors put together, obviously I think the silver lining will be the FDA concerns on a few plants.
Yeah.
If they start coming through, I think that gives an impetus in terms of more launches happening at a faster pace and faster approvals coming through. So again, I think Dr. Reddy, Sun Pharma within the larger names, where the EPS rating, RS rating institution will be strong, might continue doing.
Okay. Right. So that's as far as the pharma space is concerned. We're looking at a whole host of move. Look at Wockhardt Pharma, for instance. That's up over 8.2% odd. That's the kind of move that we've been seeing. And of course, across the board, there is a continued momentum right there. All right, Mayuresh, we will thank you then on that note for being with us on this morning edition and to share with us all those wonderful insights that you have done. Hope this year turns out to be a fantastic one for you personally, professionally, both, and for your loved ones as well. And may you come more often, like I said, on 2020 in 2025 to guide all our viewers through. Thank you so much. It's been a pleasure.
Absolutely. Thanks for your wishes. Again, wishing you, Shell sir, and the entire team a very, very healthy, wealthy, and prosperous new year. And then hope to see you guys more often.
Yes, absolutely. Okay. We also have Ms. Avni Bhatt now joining in. She's the Senior Vice President, Equity Derivatives Research at JM Financial Services. She'll be joining us shortly. Okay, she is with us. Hi, Avni. Warm welcome to you and New Year greetings to you as well. And hope the going has been good for the last 2 days. Let's hope it continues. What's the sense that you have on the markets technically?
Good morning, Sakshi. Good morning, Shell, and a very happy new year to both of you and all the viewers as well. Initially on the New Year's Eve, market did not seem to be in a mood to celebrate New Year, but yeah, it came with a bang yesterday. So I think it took some rest on the first day, and then yesterday it was back with a bang. So Nifty is, I feel, out of the woods in the near term. And it has given the breakout about the resistance zones of 24,000, the congestion zone that was there around 23,800 to 24,000, and with very good volumes. And I think going ahead, 24,250 is a very, very crucial resistance level. So some bit of profit booking may happen. Today, Friday effect may play out. Nifty probably could come down to around 24,050. But we are not looking at any major cuts from here on. So any dip close to 24,000 plus or minus 40-50 points will be a good buying opportunity. And on the upside, once 24,250 level is taken out, Nifty should be heading towards 24,600. Now, the logic behind this is, if you notice the options built up, 24,200 straddle gained a lot of traction yesterday, and it is quoting at a combined premium of around 385. Which roughly gives us a range of 23,800 on the downside and 24,600 on the upside. So that's the level that we are looking at. We could test that level very soon. Probably by Jan series, we could also test 24,800 level on the upside.
And Sakshi, you will have a 15% circuit on DMAT fairly soon. We are already up 14.5. 14.6 now, 4130. Remember, it's 10, 15, and then another 5. Let us see how it shapes up. Very, very strong volume. And good morning to you, Avni. Happy New Year. What a time to have you on the show. There is across the board an improvement in sentiment if you look at the broader markets. In this kind of a market, where would you sort of pounce on, how should I say, valuations that have corrected? Look at how people are getting back into quality counters. Yesterday, Bajaj Finance was up 5.5, Sundaram was up 14, Eicher was up 8, and today DMart is up 15. So is the enthusiasm back in the market, and is the worst behind us?
So yes, no, talking about the NBFC space, I think last year was not a very encouraging year for the space, and we saw a lot of correction as well as consolidation. Now, if you talk specifically about Bajaj Finance, it has been consolidating within a range for last 3 years. So I'm talking on a slightly broader time frame. For this year, I think NBFC space could be one of those sectors which you could look at for a gain of 20-25% on a yearly basis. And talking about Bajaj Finance, I think it is heading towards in the near term also it is heading towards 7,800 probably this month itself. Any dip close to 7,250, 7,300 should be used as a buying opportunity. And your trailing stop loss, if someone has bought at lower levels or even for fresh buying, the stop loss should be kept at 7,120.
Okay, got that. Let's look at some of the other pockets then that are drawing our attention at this point in time. Since we've been talking a lot about retail, you talked about Avenue. We can't not talk about Trent, Shell, the stock that I've been tracking, you said. Now up about 0.8% at 73, 78 odd levels. Avni, outperformer in 2024, the only stock in the Nifty that doubled investors' money on the Nifty. Will it continue to do so in 2025 as well?
Yes, 100%. And in fact, the kind of retracement that was required, the cool off that was required has already happened. It corrected from 83 odd levels to on the downside, it came down to almost 6,200. And so that retracement is over. After that, we saw 1.5 months consolidation. If you look at the chart, there has been hardly any movement in the stock on daily basis. And after this consolidation, now again it has started trading on the higher side above the short-term moving averages. So the stock slowly and gradually should move towards around 8,000 levels. And on the downside, I think the support base has been formed around 7,000, 6,950 to 7,000 levels.
Okay.
Okay, 9:36, the first 15 minutes have lapsed. Sakshi, what's really interesting is the blowout that's happening on Mafang. Now 4.3% higher. This ETF has been one of the best performing investment themes over the last 2 years or so. Yes, this is a record high, and intraday it had actually gone up to 143. So apart from 4.3% uptick today, you have a fresh intraday high that is coming in. No stopping DMart, now circuit 50. I'll request PCR to fire the longest possible chart of DMart right there in front of you. This is a tiger that has been unleashed. All-time high is 54.42, which we saw on September 15th, and then it collapsed all the way down to somewhere like what was the price? 34.50. That was a 32% correction. For those tracking markets, 34, 33 is a number from which a lot of stuff, how should I say, changes shape and size for the better. And that's what happened on DMart. So 15%, and now volume is 22.7 lakhs. The highest volume that we've seen was on 30th of December, when a lot of buying happened, perhaps in anticipation for this business update. And given the strength that we've seen in the first 20 minutes of trade, now Avni will comment whether we'll see another 5% or not. Avni, what are the charts of DMart telling you now?
I think the day will be less for the stock. We should be seeing another 5% circuit too, because it's definitely moved above the weekly 200-day exponential moving average after a big correction. So that left out feeling will also be there among the investors who were not really, who were shying away from buying the stock at lower levels, considering that probably it may break down. but it has taken a very good support around the monthly and the weekly supports, and now it has bounced back in a huge way with circuits. So this stock, even if the circuit opens, there will be more and more buyers coming in. We should be seeing another 5% circuit on the stock today, and eventually the stock should be heading towards its all-time high levels around 5400.
Okay. Got that. Do you like any of the other retail players as well, like a V2 or a Vishal Mega Mart, which is a real recently listed one, or a V Mart? Anything else beyond Avenue as well?
So I haven't really looked at the newly listed company, but yes, VMart looks good, and that's in a consolidation phase, yet in a consolidation phase. But the volumes have started picking up in last 2 days. So I would suggest once it crosses 4020 level, then we should see a quick move on the upside. So even for trading purpose, short-term trading purpose, wait for 4020 level to be crossed, and then we should see a good move up to around 4500. Currently it's not a bad stock. If you have a longer term view, you can start accumulating because downside is very very limited, but yes, momentum players can wait for a crossover above 4020.
Got that. So that's as far as the
940.
retail space is concerned.
Let's look at the volume busters. Let's look at the volume busters in the NSE 500. We've discussed DMart a lot. Now, what else is also moving? Food company Sapphire, 4.6% higher, 357. Banks are in top shape. Let's look at the Nifty PSU banking index. Let's see what it's doing. Okay, it must be amongst the top gainers. Yes, it's the top gainer, 1.5% higher, 6,700. What else is on the move? Okay, Maharashtra Bank 6% higher, Central Bank 4.2% higher, UCO Bank 3% higher. So it's a bank-led momentum on the PSU side. Let's get Avni into the conversation. Avni, within the PSU segment, whether it's railways, public sector banks, defense, what is a theme that attracts you most based on chart strength?
I think the PSU banks, because in last 1.5 months they've corrected quite a bit and consolidated quite a bit. I think they are very highly oversold, and my top pick would be SBI in this space. We've already recommended to our clients yesterday. It is taking shape, and I think PSU banking space should perform the best. Among other PSU banks, I also have an eye on ONGC.
Okay. Got that. Let's look at some of the other pockets then as well. The Nifty is now at 24,105. The pockets that have slipped are IT, pharma, private banks, financial services, FMCG and infra. But still all the action is around PSU banks. That's up 1.5%. Your top PSU bank right now, Avni, do you think you would have any top choice here?
Sorry, Sakshi, I did not get your question.
PSU bank, any top PSU bank that you're looking at? This index is up by 1.5%, so sharp surge coming back.
Yeah, I just mentioned about SBI, so that's my top pick.
Okay, and let's look at some of the other pockets within the PSU pack. Are you also looking at the erstwhile favorite power space also, Avni? Is that interesting you at all? You know, we had in 2024, we talked a lot about PFC, REC. They are coming back in flavor yet again. We had talked about NTPC a lot as well because of the NTPC Green IPO before that. Tell me now, what are you looking at in terms of the power related stories?
So yet not very excited on the space. NTPC was a complete disappointment. We were expecting the stock to move up given the NTPC Green IPO. But since then, the stock has corrected quite a bit. And yet, right now, we are looking at most of these names that you have said. They are all into a pullback mode, but yet not out of the woods. They are still trading below the short-term moving averages, and that does not give me comfort in entering these stocks. I would rather buy these stocks probably 2 to 3% higher but be sure of the up move from here.
Okay, almost half an hour has lapsed with the markets that are open. There's a 94-point downtick on the Nifty. A test of 24,100, 24,000 is on the cards, and also remember, traders would be just a bit hesitant to extend positions over the weekend, especially after yesterday's very strong rally. But today is a day that belongs to individual stocks. Look at Wockhardt Pharma. Look at DMart. Are there any all-time highs? Yes, there is on Eicher Motors, a third of a percent higher, 53.25. HCL Tech, M&M. From the pharma space, we have Ipca Labs. You have United Spirits representing the liquor business, and of course, a strong one coming in from the Visa fraternity. We generally don't track this one, but BLS Services 2.7% higher, 512. That is how it is. Any circuits apart from DMart? Let me just check. Okay, EPAC, V2 Retail, Indotech. These are on circuit as far as markets are concerned, but nothing better than DMart. 15% higher, 23.5 lakh shares have been traded, 4152. This is how the structure is for the moment. Sakshi, what are you watching?
Whole host of stocks, Shell, that are buzzing along with DMart in the broader markets. Interesting names that are coming in front. You have stocks like, Spencer's Retail also now pulling up in that entire space, 8.5%. We don't even remember last time we checked this stock. I think never. ITDC is up in the tourism space. That's up 6.5%. Quest Corp is also buzzing in trade, about 6% higher. Just Style, Thermax, Bazaar Style Retail, that's another retail play that's up by 5.5%. So the entire space is up and about today. Then we also have some other interesting names as well. But let's come to the tourism space. That's an interesting one to discuss with Avni. Hotel stocks, hospitality names right there. I think Sapphire Foods was also mentioned by Shell. Devyani International was moving up yesterday. Varun Beverages has been consistently on the up move as well. Jubilant Foods is also coming up in trade. So QSR's place plus the hospitality space, tourism space. What are you really looking at in this holiday mood?
Both the spaces. So from the hotel space, I think some bit of consolidation is seen in Indian hotels and Lemon Tree and names like that. Because the only reason being that people will be looking forward to the ITC hotels once the demerger happens on Monday. But even these stocks, the other hotel stocks, this consolidation phase, I think it should be used as a buying opportunity. Lemon Tree, if you notice, it's retracing back to the support levels. So that's a good play that you can enter into. Around 155 is a very good support level. Indian hotels at current rate also you can enter. And among the QSR space, we have a very strong view on Jubilant Food. So that is one stock which is, going to give you, it's already given a breakout on the daily charts, and it's heading towards around 900 plus levels in the coming few days. So Jubilant Food is our top bet in this particular sector.
Okay. That's
okay. 9:48. We have 12 minutes left, but it's just banks, and banks all the way. So the thread that we've been following for the last 4 or 5 trading sessions is panning out really well. Let's look if there are any volume beaters within the banking space, and that should be very easy. PSU banks, okay. Volume buzzers, okay. Yes, Maharashtra Bank, Sakshi, has already traded 200% more volume than 5-day average. So it's a blowout. Indian Overseas Bank 123% 5-day average. Central Bank 100% 5-day average, and we have just half an hour on the board. So ladies and gentlemen, the PSU banking rally plus the pre-budget rally plus the buying enthusiasm is back and back. How in the market? Look at CDSL, 1827, 1.2% higher. Amongst the banks, Bank India is something that you should look at if one is very keen to buy very quality and very good PSU banks for the long term. Again, consult an independent financial advisor, please. Bank of India held a QIP 2 years ago at about 120 rupees. A huge host of very smart investors walked into the bank. From then on, it went to about 155 and then has corrected below 100 rupees and now at 107 over the last 5-7 days. There is hectic activity that is happening on Hindustan Zinc. This is something that we should check with Avni. 2.7% higher, 465, around 200-day DMA. What is it telling you on the charts, Avni?
There's a positive crossover on RSI in an oversold zone. So this pullback is due, but whether it will give you a sustained rally or not, that we'll have to check once it crosses the 200-day exponential moving average on the daily charts, which is currently at 494. So up till 494, you can expect this pullback to continue. Anyone who's holding it, who's bought it at lower levels, should try to hold till 494 level, and at around those levels we'll have to see whether it manages to sustain above that, give a breakout above that. There could be probably one round of profit booking and sell off from 494 levels.
Okay. Titan, that's catching our attention. 1.2% higher, 3429, and along with it, the gems and the jewelry space is back in action. Avni, by now you would have noticed what Shell is wearing around his neck, the massive gold necklace, and you know that Shell is also one of the biggest consumers of Tanishq, and he's soon going to be seen as the brand ambassador for men's jewelry, and that is what we have been proposing on our channel to Titan as well. Tell me, what's the sense that you have on the gems and jewelry space? Is Titan still a top bet? Are there others that are catching up in the race? And of course, how impressed are you with Shell's gold collection?
So the impression that I get is it's Shell who is responsible for the retirement of Bapi Lahiri. And
oh God.
yeah, definitely you're looking too good. And yeah, the gold necklace is standing out. On the stock, since you have contributed so much, I think the stock should also perform very well, at least up to 3520. That is the level from where we had seen some sell-off earlier. So it may probably, halt around 3520, consolidate for some time, and then give a fresh move on the upside. The stock is definitely out of the woods. It's trading above all the short-term moving averages. So the movement should continue up to 3520, then some bit of consolidation, and only then a huge breakout for the higher targets, the earlier highs of around 3,800.
Right. Thank you so much, Avni, for those very kind words. I must mention this on air publicly. I once bumped into Mr. Bapi Lahiri. He had come to our studios in Mumbai, and that was a remarkable day in my life. From then on, I decided that one day I will wear as much, if not more jewelry than him in public domain. And it took about 10 years for me to sort of, make my mind up mentally. But from now on, it's going to be like this and like this for probably, Sakshi, more days in the week. So far, we've started on Friday. But now my better half very gently suggests in the morning, why don't you wear this? Why don't you wear this? So let's hope you see a new avatar next week. Okay. But it's great fun. It's great fun. And a lot of enthusiastic people come and ask me. Sakshi, about 25 years ago, I started buying cycles. Okay. Wherever I used to stay, I used to buy one cycle. And then slowly this trend caught up with a lot of people in the adult space to buy cycles. So I'm the progenitor of that trend, and mark my words, in 5 years you will see a men's branded jewelry chain, and I'm hoping to be their brand ambassador.
Yes.
Avni, I'm so sorry for this sidetracking, but these are the kind of things that keep you happy and they keep you uplifted.
So for a moment, I thought you were thinking about changing your profession and getting into the men's jewelry business. You should be not just the brand ambassador, but
I am too much. I am too much in love with stocks. I don't think so in this lifetime I will have another profession. But these are, hobbies. What do you do sitting in front of the market on a daily basis? You just not sort of, need to keep your mind fresh. But let's get back to the market. Trent is up 1.6%, 7438. And Sakshi, one more important thing I want to mark for you. Remember, Titan is into gold and diamond jewelry, and Trent is now into lab grown diamonds. This will also be a very, very big market.
Yeah.
Mark my words, 3 years from now.
Absolutely. That's an interesting one, and we will definitely keep an eye out on that space as well. Okay, let's move beyond the gems and the jewelry and look at the commodity metals as well. Metals are coming back. They've had a volatile recent past as well. Avni, what is your own sense? The street is too much divided on whether the metals are going to have their year in up and about space in 2025. Is there going to be too much volatility yet again? What should be retail investors' approach in the metals pack? Should it be absolutely stock specific?
Sakshi, I'm glad you asked this question. So, like last year, if someone had said that IT will be the dark horse of the year, and there were absolutely no signs of that happening. But eventually, we saw the IT pack performing very well in this 2024-25 year, and from here on, in this particular year, one space that I mentioned is NBFC, where we could see a lot of momentum in the coming year. And the second sector is the metal sector, where I have a very bullish view. Metals, all the metal stocks should be performing absolutely great in 2025. So that is one area where you could probably do an SIP in whatever favorite stocks of yours are in the metal space. My bet would be on Vedanta and Hindalco.
Okay.
956, bit of profit being booked on DMart. It's still 13-14% higher. Titan is doing pretty well now. It's moving out of a cluster of moving averages, 34-39, 1.5% higher. And now you have a move in Westlife. This is also one of the retailers, 1.4% higher. This is looking good. Oil India and ONGC in top form, 4% higher on Oil India, and ONGC has achieved its first target also with a lot of strength. Let's look at what's happening on the top gainer side. Dhanlakshmi Bank, we generally don't mark this one, but this is something that you should look at. Recently listed Style Bazaar, which is backed by the Jhunjhunwala family, is also up 8%. Again, it's the retail space that is coming up. Ashiana Housing, 5.9% higher, 367. These are all stocks that I'm continuously marking so that you can have an idea where they're headed. Canterville, this is again a retailer on the clothing side, up 5%. So this is how markets are shaping up. Retail and retail all the way, many of them at circuit. Sakshi.
Absolutely, 9:58. We'll start winding up the morning edition. 134 points of a loss on the Nifty, 24,055. So after 2 days, we are seeing some muted trend right there. At least some of the sectors that are really not participating are the IT spaces, 1.1% lower for the index. Pharma, that's down 0.8%. Private banks, that's down 0.7%. Financial services have also slipped lower. Auto stocks are also slipping. Remember, they were in the fastest lane yesterday. 0.25% of a loss for this one. FMCG is down down 0.3%. But what is up is PSU banks. 1.5% higher, strong moves across this one. Oil and gas, both OMCs as well as the gas companies and the upstream companies are all up and about. Consumer durable names are are high in trade. You can also look at the broader market. Small caps are 0.5% up in trade. Metals are shining brighter too. And of course, the retail space that Shell has marked. ONGCs are the top mover on the Nifty right now, 3% higher. Trend follows, 1.6% up at 74.40 now. Titan up at 1.7%. JSW Steel, and along with it, you also have NTPC that's in the buzzing zone. On the lower end, you have Hero Moto, Tech Mahindra, Wipro, TCS, HDFC Bank as those heavyweights that are contributing to the lower end as far as the Nifty is concerned. We also have stocks like Avenue, which is also buzzing in the F&O space, now up 13.7% in this one. Union Bank of India is buzzing in trade. Oil India, Chola Mandalam, ONGC and Bank of India as some of those movers in the F&O pack. On the lower end, again here, Prestige Estates is down by 6%. Hero Moto, Metropolis Healthcare, Tech Mahindra, Hero Moto and Wipro are the stocks which are actually declining as far as the F&O pack is concerned. But we will leave it at that, and thanks a lot to Avni for sharing all those insights with us in the morning edition. Viewers, stay tuned with us. There's a lot more coming in, and we are getting you a whole host of market masters and market gurus guiding you through your strategies in 2025. Stay tuned. There's a lot more to lined up. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is yet another year-end special interaction that we're going to be having with a top market master for all of our viewers on this New Year and year-end specials. Remember, the Indian equity markets so far in 2024 have had shown a lot of resilience for a